Good morning, everyone. Bryan Fryar here again, sales manager at TVFCU. We've got something really special today. We're going to be talking about jumbo loans. Probably heard a little bit about jumbo loans. We're going to try to clear up a little bit of information. Those of you who don't know about jumbo loans, we're going to give you a real crash course in it today. Uh, Joining me today is Jordan Ashton, mortgage originator with TVFCU. Hey, Jordan, how you doing this morning?
Hey, I'm doing great. How you doing?
Doing good. Thanks for joining us. Everyone, also too, want to thank you for joining us today. Bryan Fryar, and Jordan Ashton. Just to do a little bit of intro about myself, I am the mortgage sales manager with TVFCU in the real estate department. Been in the mortgage business going on a little over 23 years now. Been at TVFCU oh wow, let's see here, about 13 years now. And been in the sales manager role a few years now, and been in origination pretty much most of my mortgage life, I guess you'd say. Just this little bit of information about myself. Jordan, tell everybody about yourself here at TVFCU.
Well, I've been in the mortgage industry for going on 4 years now. I'm a local guy, born and raised in Chattanooga. Went to UTC, graduated in finance, which brought me into the mortgage industry. I love the Sea Valley, everything about it. One of the best companies I've worked for, and I'm also a huge dog lover. I have a 5-year-old golden retriever.
Yep. Same here. We at the real estate department, we're all huge dog lovers here.
Oh yeah.
Also, want to mention that Jordan is also one of our top producers here at TVFCU in our mortgage department. Also, one of the top producers in the Chattanooga area. Great job, Jordan. Using that experience he had, and he's doing a lot of loans for our members here at TVFCU. So we're going to jump into it real quick and start talking about our jumbo loans. TVFCU does offer jumbo loans, and Jordan's going to go into a little bit of more detail about jumbo loans and what we offer here at TVFCU. But kind of want to let everybody know basically what a definition of a jumbo loan is. I'm just going to read this, what I pulled basically from the CFPB and what they say a jumbo loan. A jumbo loan is a type of financing where the loan amount is higher than the conforming loan limits set by Federal Housing Finance Agency, FHFA. The 2021 loan limit on conforming loans is $548,250 in most areas and $822,375 in high cost areas. When they're talking about high cost areas, we're talking about states like California and places like that. For most areas in the United States, conforming loan limits are maxed out at $548,250. So above that, you're going to be in what we call jumbo loan territory. You're going to be a larger loan amount than generally is accepted by Freddie Mac, Fannie Mae, all those secondary market investors. So basically, that's basically it. If you have a loan amount above $548,250, you're going to be needing to look for a jumbo loan. If you're below that, you're going to be going for your standard conforming loan limit. So what is a jumbo loan? Why are they called jumbo loans? Of course, it's based on the loan size. And why are they separated separately from just a regular conforming loan? Well, the reason is because the loan amount is so large. It is a little bit more risk for the lender. So the guidelines are going to be a little bit different than your standard conforming loans. Interest rates may be just slightly higher just because of that, because it is more risk. But still, rates are fantastic as they are, and I know Jordan knows this. Ever since March of last year, we've seen record low rates, some of the lowest we've ever seen in the history of the mortgage industry. I know for myself, being in the mortgage industry, it's the lowest I've ever seen since I've been in the business in 1998. And jumbo loans are no exception. TVFCU, we do jumbo loans here. We do our jumbo loans a little bit different than a lot of other institutions. We keep our jumbo loans in-house. We don't sell those to an investor. We call them what we call a portfolio loan. So it gives us a little bit of leeway on what we can do on jumbo loans compared to our competition. And I know, Jordan, you talk to a lot of members. You see what other competitors offer. Just a little bit of rundown of what you're seeing is a little bit different from TVFCU as opposed to some of our competitors and what we do in our jumbo loans.
Well, what you said, they're non-conforming. They're not backed by Fannie Freddie, so it's great that we keep them in house. That's my favorite thing about our jumbo. It's just so huge that you don't have an investor or bank having to sell the loan to and go by their guidelines, their overlays. So at Tennessee Valley, we keep them in house, their portfolio, there are guidelines, just the same guidelines as any of our conventional loans are. And it's just great. And also, the other best thing is the no PMI. So,
Yeah.
PMI mortgage insurance. If you don't put 20% down, it can get very expensive, especially for loan amounts that are, over $500,000. So without mortgage insurance, I mean, you could be saving several $1,000s per year going with
Yeah.
Tennessee
Yeah.
Valley's jumbo.
That's huge. On all of our portfolio loans that we keep in house, we don't have the MI mortgage insurance, which, as Jordan says, if your loan to value is above 80% with any other lender, generally they're going to charge MI on that, which we don't do that at TVFCU. And also our competition. I know you and we've talked about this the other day, and we've talked about in the past. As far as our jumbo loans, our interest rates, we're very competitive. Sometimes we even beat some of our competition a lot of the times. I know that's what you're seeing too.
Oh yes, certainly.
Yep. And we do get some instances sometimes where we might find someone say, well, I found so and so has got a little bit better interest rate than TVFCU on a jumbo loan. But when we go look at the details, or they show us something in writing they've gotten from another lending institution, we find that either their fees are higher or they have MI on that. So in the long run, yeah, they may have a little bit lower rate than we might have, but they've had to buy down that rate, or their origination fee may be more, or they may have other closing costs to, I guess, basically to get that loan, that rate be a little bit lower. So you got to compare apples to apples. I know, Jordan, you see a lot of that sometimes. When you ask people, hey, can you just show me something in writing what you got from a competitor? And then we find that really TVFCU a lot of times has a better offer than what they can find out there. So, well, we're going to go into just a little bit more detail on what we can do, and I'm going to let Jordan kind of run through this a little bit on our jumbo loans. Now, keep in mind, again, we're talking about these are loan amounts above $548,250, which is the jumbo loan. Guidelines going to be a little bit different on those, just because since it is a little bit more risk for the lender, it's a larger loan amount. Jordan, just kind of run through what we can do as far as purchases, refinances, cash out refinances, loan to values, et cetera. If you just want to run through those a little bit, give everybody a little bit more information what TVFCU can do.
Yeah, well, with our jumbos, great thing about it is we're a little bit more stringent on the loan to value. We can go as low as 3% down, no PMI, depending on the loan amount, 750 to 1 million. Above 1 million, you might need to put a little bit more down. It goes case by case due to credit scores. You might need to put 5% down, but that's still compared to the market for other mortgage lenders. Most mortgage lenders are going to want at least 10% down. They're going to have a slightly higher interest rate, and they're going to have that PMI. So Tennessee Valley, we have the low loan to value. We also can do cash out refinances on them. All we charge is just a quarter on the rate. It's very, very competitive for a cash out refinance. And of course, like Bryan said, our rates are usually the same, better than most of the other lenders in town in terms of their jumbo loans. We can also go up to $2 million on the jumbo, no PMI. So the loan to value, the cash out, rate term refis, great interest rates right now I'm seeing.
Yeah. And I noticed you said, and I've seen this too from the competition, other lenders out there, whether they be local or they be, a big national, lender out there that advertises on TV or radio heavily or internet. A lot of those, they require 10% down payment if you're doing a purchase. I know TVFCU, we only require a 3% in some cases, depending on that loan amount. Which is fantastic. I mean, that's I always tell everybody, of course, you want to put down as much as possible if you can, but with rates being as low as they are, I think it's a lot of people are finding, why put down larger amount when you can put down a smaller amount and save that cash. I know some people want to use that money to invest. The market's really hot these days, so sometimes you want to save onto your cash and just take advantage of the low interest rates and lock in at a lower rate. So that being said, you had also mentioned too about purchases. We're talking about purchases and refinances. Tell everybody about the two types of refinances: a rate term refinance and a cash out refinance. Kind of go in a little bit of detail on that, and what the LTV or loan to value limits are on those that we have.
Yeah, so rate term, it's just what it says. It's the interest rate. Usually, people will refinance to lower their interest rate or maybe lower their term. or increase the term if they lower payment. So rate term refinance, we don't charge any extra interest rate on that. It's 90% loan to value. And then cash out refinance, as you know, Brian, it's always going to be 80% where you go, secondary
Yep.
market, other lenders. With Tennessee Valley, we can do a cash out refinance at 90% loan to value, no PMI, which is amazing. Unheard of,
Yeah.
honestly, in this industry. 90% value, especially for a jumbo loan.
Yeah, yeah, and that's strong. That's extremely competitive. You know, you can get up to 90% of the appraised value of the home, and again, you know, you're going on the 80, going over the 80% loan to value. You know, since it's a TVFCU portfolio loan, we're not going to charge MI on that, so you don't have that extra monthly mortgage insurance added onto it like a lot of our competition does. So it's fantastic. I mean, I know since I came to TVFCU, we've had these great products here, and especially this jumbo loan product that we've kind of tweaked here a little bit the past couple of years, and it's a very, very strong product, very strong. Um, and you were mentioning too about where we're talking about the rates and everything. What are you seeing as far as rate, like a range, and also too, when we're mentioning about rates, everybody needs to know that rates can change daily. Sometimes they can change multiple times based on what the bond market's doing. There's a lot of turbulence going on right now in the markets. Rates, maybe going up slightly a little bit, but they're still super low. We expect them to go up in the future sometime. When that will be, we don't know yet. But all forecasters have been saying, now they've been saying it for what, a year now, haven't they, Jordan? Rates dropped back in 2020, and they said, I think it was about this time last year, or rates are going to go up by the end of the year. Well, they never really went up that much, or very little. They came back down. Then they said, well, first quarter, second quarter, 2021, they're going to go back up. Well, they didn't really. They kind of went down a little bit. So, as far as the crystal ball, I mean, yes, they're going to go up eventually, probably small, incremental, but we're just not seeing it right now. A big rise, possibly, into this third quarter, into the fourth quarter 2021, or first quarter 2022, we might see a little bit of movement on it. But I know, Jordan, you see this too. When we do see movement, it's not a lot. It's might go up an eighth quarter, then it might come back down the next week. So that being said, if you do decide to do a loan, you want to look at possibly trying to lock in as quick as possible if you can, just in case. You never know what the market's going to do. So Jordan, if you could just kind of a range of what you're seeing on our jumbo loan rates currently.
Yeah, rates really good. About 10, 15, 20, 30-year fixed rates. We also have a 10-1 ARM, which is an adjustable rate mortgage over 30 years. If you want to get a slightly lower interest rate than you could on the 30-year fix, and you think it might be your first home or a house you can refinance within that 10-year period, you can go with the 10-1 ARM, my favorite product here at the credit union personally. But yeah, the 30-year fixed, I have several lenders in town that we compared. They've sent me several actually jumbo loans recently due to their guidelines not being able to do the loans. And when I'm seeing, we're about a quarter, eighth better than our competitors. And without the PMI, I mean, you can't beat that.
Yeah, yeah, and I know looking at the jumbo loan rate yesterday on a purchase, could have done like a 30-year fix around 3.375, right around there. Of course, today's rates they haven't come out yet, but about to come out. Rates can change just slightly, go up, down a little bit. And as Jordan said, the 10-1 ARM is an option too, because you get that first 10 years at a lower fixed rate too. And also, we're right on the money, if not lower than most of our competition from what we're seeing and everything. So, got a few questions here. We're going to kind of run through. That some of you have submitted. Some of them are some really good questions. Jordan, I'll answer some of these, and if you want to answer some of these for me. Of course, we covered what is considered a jumbo loan. Of course, that's any loan amount that's above $548,250. So just remember that $548,250. I'll just throw in a little bit of my age here and show how old I am. That jumbo loan figure, I'm trying to remember what it used to be years ago. It did not change. Wow, for years.
510, 401.
Yeah, yep.
It
did not change
at least 5 years.
Yeah, and it started changing, and it's increased over the years. So yeah, we stayed at for years and did not move, and then it's just past 5 or 6 years it's been changing quite a bit. So going up every year, so it doesn't go down, so it goes up. So So basically, that is what a jumbo loan is. One of the questions: what are the advantages and disadvantages of jumbo loan? Generally, a jumbo loan, your interest rate is going to be a little bit higher, just because the risk to the lender. Again, TVFCU's rates are very, very competitive, and then also your loan to values with other lenders, they're going to require you put 10, 20% down. TVFCU, as Jordan said, 3% down in some cases. So disadvantages with TVFCU with jumbo loan really aren't that many, if any, especially compared to the competition. Let's see here. Does a jumbo loan extend beyond 23 years? Jordan, if you want to answer that one.
Yeah, definitely. Of course, the most popular is the 30-year fixed. You get the lower, slightly higher rates, but you get that lower payment for those big amounts. So 30-year fixed is what most people see. But we have like I mentioned, we have the 10-1 ARM, then we have the 10, 15, 20 year fixed loans as well. So yes, we definitely can't go past 30 though.
Yeah, definitely. So 30-year loan, that is like the most popular. And of course, on the jumbos, that's going to be your most popular. But the lower your term, the better interest rate you're going to get. We have a 30-year fix, a 20-year fix, 15-year fix, and a 10-year fix. So the lower that you go on that term, the lower the interest rate. Again, that's risk. The lower term is going to look at as a lesser risk for the lender. So if you are looking for the best rate, either 10-1 ARM option or a 10-year fixed may be your best option. Now, again, the lower your term, even though your lower interest rate is better, or your interest rate is better on that, your payment is going to be higher because you're shortening the term. Everybody talks about interest rate. I know, Jordan, you talk to people every day, dozens of people every day, and everybody, rate. Everybody wants to talk about rate. And rate is important. But term, that's just as important, if not even more important. I know. Tell everybody what you do sometimes with what we call an amortization schedule when somebody's looking at a 15-year loan as opposed to a 30-year loan and interest. What do you point out to them when you run that schedule for them and show them the difference?
Well, basically, of course, the payments are much higher, even though the rate can be much lower. A lot of people think a lower interest rate automatically means a lower payment. But when I look at amortization schedules, I usually see the interest and principal being flipped around, where you're actually paying twice as much towards principal than you are interest versus a 30-year fixed rate. Those first several years, I mean, your interest is way higher, sometimes double than the principal. So
Yep.
a lot of people do like that. The 15, you're cutting off twice as much interest over the 30-year term, but you have a higher payment because you're paying it off twice as fast.
Yeah, and that's like I said. Term is just as important as interest rate. And I'm a big fan of the 15-year fix if you can afford it. Now again, if you're younger family, your income may not be as high as you are further into your career. 30-year rate or 30-year term is going to be your best option. But what we're seeing right now, especially the rates dropping right now, past year and a half or so, a lot of people doing a rate term refinance and they're currently on a 30-year loan, they're taking it to a 15-year loan. Not really change the payment in some respects, or maybe just slightly higher, but they're cutting out a lot of interest, years of interest, and paying off that home, and that's really important. Especially, everybody's dream is have that home paid for. Especially if you might have a family, you're sending kids to college. It'd be great to have that home paid off, and you've got a free and clear asset. And those funds that you were taking and paying towards a mortgage payment, you can put that towards college, or you can put it towards retirement, or you want to buy an investment property or something like that. That's big right now. So I know you're seeing a lot of that right now, Jordan. Also, too, you had mentioned getting loans from other lenders. Tell everybody you had what we call a rescue loan the other day. I think it's a couple weeks ago. We had a local lender. Go ahead and tell everybody about that.
Yes, I get them all the time, but just so happens I got a jumbo rescue loan. They were about ready to close. The underwriter or the investor from the underwriter we're selling the loan to found a little thing on their tax returns from a couple of years ago. They didn't like it. Their underwriter denied the loan. By the way, this was a $1.3 billion house too. So all parties were a little bit there. So they said to us, I got with Bryan and my VP. We reviewed the file. It looked great. That company, it was, like I said, it was from almost 2 years ago. So that's a good thing about the Tennessee Valley portfolio. And they actually got a better rate than the other lender and no PMI. So these borrowers from California, they're so happy with us, and they're going to be forever members. They moved all their money over to us, and we use this for everything now. So it is great
Yeah.
having those portfolio guidelines. They can save the deal. That's why they call the rescue loans.
Yeah, yeah, it's kind of something we're known for, especially with our friendly competition. I have a lot of friends in the business here, and they're good people. They work for good companies, but they know that we can do some loans that they can't, and we do appreciate the referrals. If they can't get a loan done, we'd like to do it. And of course, the one that you saved the other day, of course, we'd loved it if they came to us first, but we're glad that they were referred over to us. Because we like that opportunity to look at that loan and see if we can do it. But I know Jordan does several of those, so if you have a loan that you're looking at doing or that's not going well with your lender, definitely give us a call because we'd like to look at it and see if we could do it for you. And chances are we can get a better deal for you. A lot of times we can. So I'm going to go through a few more questions here and see what we can answer. Did get a lot of questions. A lot of these are the questions that we got were kind of general. Like one of these was, how much house can I afford? I know, Jordan, you get this question a lot when you're talking to people, and also in terms of a jumbo loan. So if somebody's wanting to buy a house, what's the first thing you do when you start talking to them?
Well, we go over their goals. What do they do with the house, long term, short term, and of course, pre-qualification. You got to get that pre-qualification letter in hand. The realtor will need it, or if it's for sale to owner, I'm sure the owner of the house will have to know that you are qualified to purchase a mortgage. And then from there, we take the application. The three things you have to consider: income, credit, and assets. Look at your credit report. Look at your debt to income ratio, which we can go very high, up to 50%, very competitive for the other lenders in town. Unless you're going FHA, I mean, jumbo loans, I don't think any lender can do a 50% debt to income ratio on a jumbo loan product. So really, we'll look at your income, your credit scores, your debt to income ratio, and as long as you're below that 50% debt to income ratio, we can qualify for it as much as you like.
Yeah, and again, that's a good thing about having the portfolio lending that we do. We can do some things that a lot of other lenders can't do. Going to circle it back around. One of the questions I just noticed on here is, what's the difference between a jumbo loan and a classic mortgage? Again, uh, as I was talking about in the beginning, if you're just joining us, we're talking about jumbo loans. Loan limit maximum, or for just a standard conforming loan, is 548,250. So the difference going to be, if you're looking for your standard conforming loan limit, it's going to be below that. Generally requires 5% down with the MI. If you're going with another lender other than TVFCU, which we have our portfolio products, we don't require MI. And same as our jumbos, we don't require it either. And of course, if you're looking at purchasing, we can go as high as 97% of the purchase price, which means only 3% down. Talking about down payment, Jordan, tell us a little bit about down payment funds. Where do those come from? What are they? Kind of give it just a brief overview of down payment, and also to talk about seller paid closing costs, because a lot of people, they don't know they have that option. The seller can pay for the closing costs.
Yeah, so when it comes to down payment, the mortgage lender has to you usually want about 2 months of bank statements, either from checking, savings, even 401k, stocks, whichever liquid cash you can have and bring to the closing table. That does have to be verified before we can be cleared to close. In regards with seller concession, seller credit, we can go up to 6% of the sales price, and that can cover your full closing costs in most cases. So that is, we just implemented that recently, the 6% seller credit, and with these jumbo products, it could really help because with those high amounts, you might see a little higher closing costs, property taxes, city taxes, homeowners insurance, and
Yeah.
you can get that all covered by the seller.
Yeah, yeah, it's one of those things too that you'll want to negotiate when you are writing up a contract. And again, speaking of contracts, I know, Jordan, you work with a lot of local realtors. We do highly recommend that you use a good local realtor in the Chattanooga area. There are tons of them. We work with most all realtors in Chattanooga area, North Georgia area. We highly recommend using a good qualified realtor in your area. And can help you with that negotiating on a purchase. And also, too, I'll mention too, with the low inventory that we have here in the Chattanooga area, North Georgia area, and across the United States, it's almost imperative you have to use a realtor nowadays to help you go through that forest of trying to find a home. And again, I know, Jordan, you work with a lot of local realtors in our Chattanooga area. Isn't that right?
Oh yes, yes.
Yeah.
All from all over, all the local real estate companies in town. Highly recommend. I use them for all my. I bought 3 houses in the Valley. I use a realtor for all of them. They really helped me out writing out the contract, knowing what to ask for. Then once you get the appraisal and inspection back, then the realtor can come in and ask, get that inspection. The realtor can help you out with how to negotiate with the listing agent, and the buyer. And I saved thousands of dollars
Yeah.
with my realtor purchase.
Yeah, I highly recommend it. Also, you brought up a point there, and I'm going to let you expound on this because it's something that we're very proud of here at TVFCU for 2021. You mentioned appraisals. Tell a little bit about what TVFCU offers when it comes to an appraisal.
Yeah, I'm glad you reminded me about that. So at Tennessee Valley, we pay for all appraisals. We've been doing this for, I believe, a little bit over a year now. Right, Brian? I would
That's
say
correct.
around
Yep.
last summer. With this competitive market, a lot of appraisers are upping their fees just because this high volume, so much business out there. The appraisers can't keep up with it. So usually, for a house that is, 500-600K plus in price, they're going to charge a little higher fee because it's usually going to be a bigger property, maybe more stories, bigger acreage, maybe a pool and a pool house. All that stuff. So I've noticed every jumbo product the appraiser has asked for a higher fee, anywhere from
Yeah.
$695 upwards to $1,000 for the appraisal, and that's an upfront fee that another lender will ask for the borrower. So
Yeah.
Tennessee Valley pays all of them. The deal doesn't work out, we ask for that fee back as well.
Yeah, and that, again, that's another thing that makes us stand out from the competition because most of your competition, they're going to ask for a check up front to pay for that appraisal. Regardless whether the loan goes through or not, because the appraiser does have to be paid. They're an independent third party, and they're going to want to be paid. So a lot of the competition, you're going to have to pay up front for that appraisal. At TVFCU for 2021, our special that we started in 2020, but we extended all the way through 2021. TVFCU will pay for your appraisal if appraisal has to be done. In most cases, we do have to have an appraisal. In some cases, we do not. But if there is an appraisal required, then TVFCU will cover that cost for the borrower. So again, fantastic deal that we're offering here. Also, too, we were talking about closing costs too. Just I want to delve on that just a little bit, especially we're coming into tax season. Property taxes coming due. So you want to mention a little bit about what we're seeing this time of year that may be a little bit different from another time of year because it does impact what you might have to bring to closing. So if you want to just kind of delve into that.
Yeah, so in Tennessee, property taxes, city taxes are due in October. Georgia property due in December. So now we're right in that time. It is out October 1st, actually, of today. So a lot of our buyers are having to pay a whole year up front of taxes, which could add $3,000-$4,000 extra closing costs you have to bring to the table because you have to pay for those taxes a whole year up front if they're not already paid by the seller. Now, of course, in Tennessee, going into December, January, you're going to see a lot lower taxes you will have to bring to the closing table.
Yeah, and that can impact, especially if you're doing a refinance, a cash out, or a no or rate term refinance. You're wanting to roll in those closing costs. Just something to remember. You'll need to. And your originator, when you're talking to Jordan, if you're talking to another TVFC originator, they can kind of set that up to where you don't have to bring money to closing, or unless you want to for a refinance, you can roll those in depending on if you have the equity in the home. There are some circumstances where borrowers want to pay their own closing costs. Or they may want to pay for their own escrow. We've had some people that want to do that because if they're paying off another lender, they're going to be refunded their escrow that currently sits there. We had one that the other day, the borrower, he was like, I'm getting $6,000 back on my escrow once we pay this loan off through my refinance. He said, I'm just going to go ahead and pay for my escrow and I'll recoup that money back. So that's something to think about. I know when you look at loans, it's something that you talk to borrowers about. So that some great ideas. Main thing is talk to a good mortgage originator, Jordan. Especially Jordan, you want to talk to him if you can, or any of our originators here at TVFCU. We have a staff of 10 that cover several areas. Jordan, tell everybody which areas you cover.
Well, I've done loans for everybody, North Georgia, Cleveland, Chattanooga. But my territory is the Brainerd, East Ridge, and East Brainerd area is my territory. So that's where I do the most of my loans for members. But I mean, we're live in Florida, Georgia, Alabama as well. So
Yeah,
we can
correct.
do
So
them all over.
you do loans everywhere. I think you've done Nashville, you've Knoxville,
I've done some
West
Florida
Tennessee.
condos.
Yeah, yeah. Another thing that TVFCU does that some of our lenders don't do, mention that about condos too, about conforming, non-conforming condos, because especially with jumbo loans, those can get in jumbo territory. So kind of expound on that a little bit.
I've actually gotten some rescue loans out of their condos because sometimes they're non-warrantable, and a lot of lenders can't buy. They can't hold their mortgage. Fannie and Freddie won't accept them in those situations. And at Tennessee Valley, with Pico Portfolio, we're not going to have those overlays on the non-warrantable condos. And it's really helped us get some deals. I
Yeah,
did
yeah.
two last month actually from another lender who there was an issue with the condo, the way the HOA is working, and their investor denied it. And a realtor brought him over to me, and we got him closed last week.
And that's something, for everybody. If you're looking at purchasing, if you're looking at condos, you'll want to check with a realtor and find out if it is what they call a non-warrantable condominium. And what that means is non-warrantable means that complex. It may be a new condo. They're not yet or not available for financing through Fannie Mae or Freddie Mac. So that's considered non-warrantable. In that case, you're going to have to go to a lender that only does a portfolio in-house lending because they can't do the loan via Fannie Mae or Freddie Mac or even FH or anything like. Well, they don't do them, but you'll want to talk to a lender that can do those. We do those all day long. We do non-warrantable condos in the Chattanooga, North Georgia area, Florida. We've even done some in Florida, quite a few actually. I know, Jordan, you've done several yourself. So if you're looking at properties, and especially if you're looking at condos, you'll want to check with your realtor or the sellers to see if it is non-warrantable. If it is non-warrantable, you'll definitely want to talk to a TVFCU because we can do those in many instances. Well, clock is ticking right now. Looks like we're going to go ahead and try to wrap everything up. Jordan, appreciate you being here today, kind of answering questions about jumbo loans. If if you have any questions, please give us a call. Also, want to announce we've done our drawing. Kenyatta Scott, you're the lucky winner of a $100 gift card from TVFCU. We'll be in contact with you, Kenyatta. So congratulations on winning the gift card. We want to thank everybody for joining us today. Jordan, go ahead and give out your contact information so everybody can reach you if they need to get a hold of you about a jumbo loan.
Yeah. Well, again, my name is Jordan Ashton. Email is jordan.ashton@tvfcu.com. And my direct phone number is going to be 423-634-3648.
Great. And everybody, Jordan stays very, very busy. So if you want to try to get a hold of him, or if you just have general questions, feel free to call us at 423-634-3667 or tvfcu.com if you want to apply. Jordan's application link is there in our mortgage section on our website under Meet Our Team. So if you want to apply with him directly, definitely go there. And anybody on our team, we have a great team. We're very proud of everybody we work with. We do everything local here, local underwriting, local processing, all here in the Chattanooga, North Georgia area. So want to thank everybody for joining us today. Again, if you have any questions, reach out to us or reach out to Jordan directly. And want everybody to have a great weekend, safe weekend, and we'll see you next month on one of our virtual seminars with TVFCU. Thanks, guys. See ya.
Thank you.